Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, September 29th, 2025. It is 10:51 a.m. Eastern Time, so I'm starting the video, and I picked this time. I've got some things I wanted to go over, but what prompted me to do the video kind of went off on a tangent. It's a reply to one of a question put to me by a subscriber today. I'll go over that, and it kind of ties into this and some other things, which is kind of it's two markets right now. It was the question that kind of prompted me to do this video is Kevin was asking how to, asking about blow off tops, what do they look like, how to trade them, and how to trade QQQ. I'll just say this, and my reply is, well, when you figure that out, let me know. Laugh out loud. But QQQ is about as difficult to trade right now as I've seen it. It's been, since the April lows, a buy and hold market, but it's not been a buy and hold market this year. It was tremendous opportunity on the short side, and then tremendous opportunity. We covered reverse long there, and then it's been a buy and hold market since. It exceeded where I thought the bounce would go, but again, it's a swing traders market overall. If you look at this year to date, again, tremendous profit on the short side, drop, tremendous profit off the lows. And even from that point, it's been a buy and hold market. However, it's also been a very, very good, even better, in my opinion, stock traders market. So you have both, and the buy and hold thing won't work forever. It's been a relentless uptrend. And again, that doesn't last forever. We've had, a couple sell signals in recent months on QQQ. And not that they didn't play out. The previous trade we had a couple months ago hit that first target for a quick, whatever it was, small gain, bounce from there, and then went on to succeed the suggested stop on that trade. So again, that one was either profitable if you took profits there, didn't recycle back in, or a loss if you were holding out for longer targets. Again, there's a lot of ways to trade. So I'm starting this video here because we just hit this target. I made clear on Beyond, and I do this all the time, but it bears repeating. I know there's always new subscribers to the site. The levels I mark, when I mark up a chart, I see resistance levels, and I mark those, and those are the price targets. But I always personally and encourage others. I can't advise anyone anything. That's not my role. But I state my preference to always sell slightly below the actual resistance level. And so you can see, and if you look in real close, you're going to see there's a reaction low right here that comes in at 222. And so I'll tell you, on thinly traded stocks, I'm not always going to tell you where my order is, because if too many people on a thinly traded stockpile order, I went across this stock, I'd loaded up in multiple accounts on this today. I had a high degree of confidence in this trade, and it's hit. So let's just go over it real quick. This is where I got it out to you. And plenty of time. We were at 119, and so it's, I said if we go all the way, I just rough measured those targets, and again, you're going to sell a little bit below resistance, so about an 86% profit. That's about where, again, close enough to that 228 level. And again, a lot of eyes are going to be on it, so you don't want to put in at 227, 226. Also remember, first of all, it's a very low price stock. It was down to, close to being a penny stock today. But the other thing there is a lot of eyes are going to see it, that 228 resistance level, and you're going to get some sellers stepping in. Now we can go through there, and I give you a second target, which is even better resistance, and that's, you have these 200-day moving averages, T2, which is price resistance, and then the downtrend line. So if it comes in like this, if we get a reaction here, then we pull back. You also have the gap right here. Keep that in mind as well. They're most likely, there's the gap, and I'm going to put a little line there for you. I'll just put a line like this. And again, I didn't fully marked up the chart as quick as I could this morning to get it out to you guys in time. I made sure, if I get something out into pre-market, tell you that's objective, that's when you want to, buy it. I knew it would explode in the open. And one thing on this, just so you know, okay, call it a gunslinger trade. What does that mean? Obviously, it's aggressive. It's low price stock headed to potentially headed to penny stock fill. When stocks drop below $1, if they trade there too long, they face a delisting notice, and then it's a downward spiral if they can't get their stock price above and maintain above $1 for too long. However, the first thing I do on a stock like this, when I see that down, caught it pre-market down over almost 60% at the time, and I know this stock. I'm going to go over that. We've traded this stock long and short many times over the years. And the first thing I'll do here, let me show you, is check the news. Okay, because I don't want to buy a stock down, 60% that's been in a bear market, vicious bear market, and that huge final, really a potential selling climax. I'll get to that in a second too when I follow up and go over the questions that I answered this morning. But the first thing I wanted to see is, okay, something caused the stock to drop 60%, gap down this morning and trading that low. And if it's a bankruptcy filing, I don't want any part of it. I'm not going to play that game. So quite often we saw it with a lot of the meme stocks. Was it GameStop or AMC or whatever? And these, the Reddit group kind of bid those stocks up, even though there was no intrinsic value. Once a stock declares bankruptcy, files for bankruptcy protection. Think Spirit Airlines. Every major airline. I was talking to my wife about this yesterday. She wasn't aware. Something came up, and I mentioned Spirit. She didn't even know they filed for bankruptcy recently. And I said, nah, but every major carrier that I can think of, American Airlines, Delta, United, I believe they've all filed for bankruptcy one time or another, and they keep flying. The planes stay there. All it does is it's a financial shenanigan move to get the creditors off your back. But what happens is stockholders tend to get wiped out. And then creditors have to reorganize and take 50 cents on the dollar, 80 cents, whatever it is. So a company will often continue. But anyways, I don't want a piece of that. So that's the first thing I check for, and that's not the case. They just they launched some, it's dilution, share price dilution, launching an exchange offer for convertible notes. Obviously, things haven't been going well for them. And so when you look at that, you often get that final kind of puke up move that just washes out the last of the weak-handed longs and then brings in some what I call JCL short sellers. I wouldn't short this stock today if with your money. That's literally, it's like, but then people do that. They read the news that it hit on Friday and they short it. Now what do they have to do? They have to cover. So either way, that's the trade. And you don't need many of these, a couple of these a year. And usual, you can see our exit point was right on the money so far, 12% give back. And again, I made the point, if you take any trade on the site, or if you're watching, interested in any single trade idea or an update on the market, always check the comment section. You can subscribe to the comments here and it'll give you an email. But I made a point real quickly to get out to you that, there was a reaction this morning, right after open. Great buying up. Probably the last one you're going to get. So that's it. Get in, and then it's going to be done. I wouldn't, personally, I wouldn't add over that. And I did. I bought that pullback, and that's why I got it out to you. And so that's the last one. So you can get these kind of updates here. And then I also went on to make very clear that a lot of eyes are going to be on 228. Therefore, you're not going to get there because people like me that have done this for a long time and have learned over the years, if you set your sell limit order at 228, well, first of all, on a penny stock or low price stock, the minimum bid and ask is going to be a penny differential. So even if it hit a high of 228, and this happens a lot, again, if you're a rookie trader, it will happen to you, or it already has. You wonder, why in the hell didn't my order at 228 get filled? The high of the day was 228. Well, guess what? That was the highest ask price, what somebody paid for it. You put a sell limit at 227, you're not going to get filled, even though the stock traded at 228. That's the difference of the bid and the ask. So you always want to sell, tick down a few, and a few pennies at least. And like I said, for the reasons I stated, I thought 218 was the level. And that's where, boom, out. And now look, we can make power back up, and I have a good chance I may re-enter this. We'll see. But there's that. So there was that little tip there if you took it. And then the follow-up that we had a little pullback and get in there, but don't chase there. This one missed it at the open. But either way, these every now and then they just come your way. You just have to sit down pre-market, like I do every day, and look to see anything moving big, any big developments, any opportunities, and most of the time there's not. And every now and then there is. And if you look at that, a stock like Beyond Meat, other than checking the fundamentals like I do, I mean the news right away to make sure, okay, why is it down so much? Make sure I'm not buying into a stock that's declaring bankruptcy and is going to ultimately go to zero. I don't want anything to do with that. The other thing is, I factor in fundamentals. Like that may come into play here, that guess what? We're short. I'm giving you trade ideas on beef, live cattle, and feeder cattle. And they're at minimum the upside's limited. I had asked my wife to grab a couple fillets the other day from Publix, our local grocery store. She was going shopping. She comes home $32 a pound. I'm like, Jesus, for filet mignon. So and I said that. So what's going to happen? There's a ceiling on beef. People will start going back to sirloin or whatever else, or chicken, or this fake meat alternative. I don't know. Maybe steak eaters aren't going to eat Beyond Meat, but so there is that fundamental thing, and it's a theme that I've been doing this year. I'm going to go over that 1 second of buying, and it kind of ties into this comment here. Let me get to that because I know I'm going kind of tying this all in. That's a new post. I didn't see that one yet. ZM, I'll take a look at that when you get a chance. Where do we go here? Oh no, I'm on this sorted by Beyond Meat. Let me just do that while I'm here. So when you click on the ticker tag down there, it'll load all posts, so you can see in the past. This is a stock that tends to move big too. So when I go into this one, I'm not looking for a little 5-6% swing trade like I might on SPY or QQQ. I'm looking for big gains. So we milked that one, hit our first target. That you could see that on the previous chart I gave you. That was this last trade right here at a sole target with 2 additional potential targets, but they were only potential. And that was a rally back into the 200-day moving average. So we would have, I guess it was on the breakout of that bullish falling wedge, hit our first target zone right there. You can see it, the 200-day moving average has stopped it. They stopped it here, they stopped it here, they stopped it here, they stopped it here, they stopped it here. Well, guess what, guys? That's where bear market went. This stock's in a bear market. And I realize that. And I love trading bear market rallies just like I love trading bull market corrections. If you've ever wondered why I short so often, even the indexes or key stocks in a bull market, it's the same reason. Bull market corrections on stocks in bull markets are exactly like, well, they're actually the bear market rallies are more profitable. They're the ones with the most juice because you get the additional boost from short sellers getting squeezed and covering. And so anyway, I'll try to update this later. I'll let you know if I see an objective entry point. There really aren't. You might have to just use Fibonacci retracements, maybe a 32, 38.2 or 50% retracement, something there. Because at least on the daily chart, that you don't have any real support levels right here. It hiccuped a little bit, but I don't know. So I'll just probably take the quick money and run. But if you set your stops, so you lock in a gain if you want to run up to T2. Let me go back to what I was just showing you there. So here's kind of the history on just this one. 40% profit. It's been covered many times. Other trades in a lot of these, as I've often told you, the videos are where probably 80+% of the trade ideas, 90+% are shared. Sometimes even the ones that I'll eventually start marking individual charts up. But you'll usually get those in videos. So that was an update of the same one that we closed out for 40%. But I know there's been a couple misses on here, like everything. Nobody bats 1,000. I say that all the time. So that was still all part of that one trade there. That was a setup. And if we go down, here's one. So there's an example. And it's the same thing with the stock market. If you're trading QQQ or SPY, counter trend, whether it's in a bull or bear market, if you keep your losses small and your relative, just the most important thing, and I talk about all the time, is the risk-reward ratio on a trade. You got to pick your number. At least, I usually will do at least a 2-to-1. Depends on the trade. That's usually my minimum. 3-to-1's a sweet spot, but as you guys have seen over the years, if you followed me, some of my trades have 7 and even 10-to-1 RRs. those are typically the more aggressive trades that I'll use a relatively tighter stop, because if it doesn't work out, it's probably not going to work out. And so, again, you can use your own RR, but I just want to make the point here that, it's just like taking these shots at QQQ, and I'll continue to take. Keep your stops relatively small based on the profit potential. And so you get stopped out here or there for, in this stock, for example, what I show you, a 2% stop loss on the one miss that we've had in the last couple of years. Today was 85 plus 90% profit. I just showed you a minute ago that previous trade 40%. That was the final target, 34. So the 25 was just the third target. And again, you can pull these by just clicking on the ticker thing. First target 9%. Previous one. See, I'll get back in. Sometimes if I'm see a move coming, is this similar to what we're seeing on QQQ? The charts are still there indicating a bounce. So we got in before that trade. I guess it was here, 5% loss, stop loss. But that's it. So you got to have, if you're risking $1 to make $1, you can make money in the stock market. You just have to have above a 50% success rate, meaning you need to be batting north of 500. And, in the certain markets, certain stocks, I'll do that a lot. But, if you're starting out, again, that's the key to successful investing. Warren Buffett said it best. Rule number 1 to investing, don't lose money. Rule number 2, don't forget rule number 1. And it's that same kind of thing. Now, you're going to lose money. Just don't take 20, 30% losses on trades. And then when one finally goes right, you get excited and you book profits at 10% on that same trade you've been trying. Yeah, you're going backwards there. So, all right. So that's it. There's the end of those are the updates on that one. And let's go to the comments that I wanted to that I replied to today right here. All right. So go down here. Zoom in a little bit. Can you give us an idea what a blow-off tops have looked like in the past? Clearly, the Qs are at their highs. I'm just curious what your thoughts are. Well, first of all, let me say this. No two tops ever look the same, okay? But I'm just adding to that to what I replied here. So a typical blow-off top, first of all, comes after a prolonged and very overbought bull trend. So, that's number one. Don't look for blow-off tops on something that just bottomed and might have a strong move up. Even if it's an explosive move up. That's not, blow-off tops come at all-time highs or multi-year highs. You got to look for them in the right place, right? And then typically they're marked with a final thrust up that goes parabolic or nearly vertical, usually accompanied by a noticeable surge in volume, which is known as a buying climax. Once the blow-off top / buying climax is over, the security, be it an index, a stock, an individual stock, a sector, commodity, whatever, it will often tend to fall just as fast as it rose leading up to the blow-off top. Quite often even faster, but not always. So the blow-off top, looks one way. If you get a blow-off top, it's going to look, it's pretty evident. You'll know it when you see it. And then a couple examples that come to mind quickly. Bitcoin made a blow-off top at the end of 2017. Let me see if I can pull that for you. I just on this charting platform, we'll just use GBTC. 2017. This is what a parabolic run looks like. This is a linear advance. You can draw a trend line. And when the slope of that line starts to increase, that's a parabolic advance. And so you can see it was near vertical at the top. And then in typical fashion, look, this is your, hopefully you can see my volume bars here. I'll turn them up a little. So these are the things you want to look for a blow-off top or a buying climax. Is that there's that last leg was nearly vertical. We're definitely going parabolic at that point. But you can't start shorting parabolic or you can't start shorting a vertical run. You can get killed because sometimes the biggest gains, 1999 will tell you that. Just look at a chart and try to figure out, where it's easy in hindsight when you look at it, but, as it was happening. So what you need to see is some kind of evidence of a reversal, sell signal and all that. And you want to see that come after that, see that big spike in volume right there. And there was a blow-off top right there. Again, another one. We went nearly vertical. Big buying climax right there then. Volume really started surging up. Here was an example that it didn't prove to be a blow off top. So you got to be careful every time. That wasn't as parabolic really or vertical, but there was some big volume there. And that's what Bitcoin looks like. The other, as I mentioned, and again, these are just some that come to mind. Gold. I'll zoom back a little bit so you can take a look at that and grab this right here. Where's my time slider? Yeah, I can't find it. I'm just going to zoom here for you. Let me turn off all the lines real quick and you can see. So gold was in a bull trend, and then that final right here. See that near vertical straight up run on a large, noticeable volume spike? That was a blow off top. And then we entered a multi-year. These are the year breaks. I'm on a weekly chart. Multi-year bear market. And so we could be in the makings of that now. Looks like it price-wise if volume picks up a little bit more. And that's it. So again, those are things, traits to look for, none of which guarantees anything. It just increases odds, probability. That's all. That's all what we do. Technical analysis is an art, not an exact science. So that's it. Okay. And then that follow-up response, David said, hey, just looking at trying to figure out how to play QQQ. And so there's my joke in line. Yeah, let me know when you figure that out. It's been QQQ has been a very tough trade for me. It's again because it's not responding well to the technical. We'll break these, we'll have these nice little wedges and chart patterns. They'll break down, and I'll get to QQQ in a second. I want to do an update for you for sure. But this is an important takeaway, guys. This game, if you're in the market to make money. I remember some years back, somebody contacted me through the site. They'd been following this very wealthy individual in Dubai, wanted me to, come and or not come over there, but do a trade up. He was creating a portfolio, and he had different managers managing different disciplines, of the portfolio, whether it was oil, stock. Wanted me to trade gold. I said, look, I'll do that. I could do that for you, but that's the thing about gold. When I don't see an opportunity there, I'll stand aside for months and years. But then there's times you're getting daily updates from me and I'm trading the hell out of gold, long, short, or on the long side buying dips after a breakout. And the thing is, there's so many more opportunities. So when the opportunities aren't in gold, my focus lies elsewhere. And so what I wanted to say here is, keep in mind that with the stark and basically unprecedented dichotomy between the handful of mega tech stocks that are responsible for the bulk of the gains in the indexes in recent months and years. Again, this is well documented. We're seeing it's unprecedented at this point in time. The top stocks lifting the indexes and giving this guise of strength. And if you only own index funds, hey, that's great. But that's not going to work out for you forever. History shows that the longer you get that disconnect, that dichotomy of fewer and fewer stocks doing all the heavy lifting or most of it, the ensuing correction or bear market is usually more powerful than the norm. So just keep that in mind. I told you, there's a complete circle jerk going on in AI. It's now, I've been saying it, now I'm reading articles, others are noticing that and it came out clearly with the AI, OpenAI, and NVIDIA deal. And Oracle in there. It's just money going around, and so there's some articles you should read up on how NVIDIA is pretty much funding these companies like OpenAI, but then they got to turn around and buy NVIDIA chips. And so it's once the trend goes the other way, and where it's going to most likely start from what I can gather and what I see is when the likes of Google and Meta and Microsoft, or I should say Alphabet, Google's parent company, and they start cutting back on CapEx because they're not seeing the returns on this massive investment into their AI, and they cut back, it will then be a vicious cycle. It goes the other way. NVIDIA is going to take it on the chin. NVIDIA then is going to pare back, subsidies and financing to companies like OpenAI, and it will go the other way. It's a matter of when. It's not an if, it's when. So. Anyways, so that's what's been going on, And while it's been good to buy and hold the indexes since April lows, like I said a minute ago, it's very much been a profitable stock pickers market for flexible traders trading both long and short, or even those that don't short. And I know some of you don't. You don't understand how to do it. You don't have a margin account. You're told, oh, don't short stocks. It has unlimited losses or whatever. It's anti-American, whatever, pick your poison. That you can simply swing trade stocks along with bullish setups. And whether they're continuation patterns or other bullish chart patterns or breakouts, as well as beating down blue chip stocks that have fallen to very good support levels with divergences and oversold conditions. So my point is, I know this is long-winded to Kevin, like, Q, 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 Q. There will be a time where it's easy. The indexes are easy because they're diversified. And I like the indexes, and I'm always going to cover them because I like trading futures for tax purposes, if nothing else. They're very tax efficient with the 60-40 taxation rule, long-term, short-term gains. That's a big draw. They trade around the clock. They're liquid. I don't have to worry about big gap downs, trading QQQ and getting stuck on the wrong side of a gap that bypass my stops. Because if I have big position in NQ futures, long or short, and at 3 in the morning, if there's some big event that goes on, and the futures run one way or the other, guess what? My stop's going to be hit because they're liquid at 3 in the morning, and I don't have to wake up to that big gap down in QQQ. So, but what I wanted to show you here is, here's just a quick example, and these are some that come to mind just this year, the recent trades. This is, again, how you can, in my opinion, vastly outperform even this strong bull market if you're just in QQQ and SPY, which again, it's, if that's your thing, just keep it simple. You don't need to watch all these videos. Buy an index fund and hold it for long. Oh, I'm sorry. T3 was hit. So this was our entry. Just like today, we bought, whatchamacallit, what was that? Jesus. Beyond Meat. Thank you, BYND, at pretty much at the lows, within pennies of lows. And we sold at the high. That's what we did here. We didn't get the high, but this is how most of these trades work. And you do this, that was our trade on Pepsi. We exited T3, had a nice pullback that you sidestep. And see, that would have stopped out just about any long with a reasonable stop loss order. Anyway, so we were able to milk the bulk of this move up with near impunity at the lows, exit right at the highs before the first big correction. And again, that's one of many. Now it went on, and this is one on my radar that and I told you before, may re-enter because it's coming in for a back test of this trend line. But either way, let's see, other ones that come to mind this recently. And again, this has been my theme, these blue chip names, or close to blue chip. I might not call Lululemon a blue chip stock, but you guys, it's a big retailer. Start out with women's workout clothes, I think, and they've expanded on, and they've got men's wear now and casual wear and all this other stuff. I've said, give you targets, we're well below, but I stuck with this one, still think it's good, that divergent low. And again, it's a beat down, high quality name with a constructive chart. So these are the ones. Etsy I gave you last year here. Hit my first target. Hit it, went a little higher, pulled back, but I did an update. It pulled back because we hit T1, went a little above it, had negative divergence, corrected back to nice support, and it's running up. And these are the kind of stocks that, they're in like many others. I've already covered this many times. If you stripped out the top 5 even, but especially the top 10 stocks in the S&P and Nasdaq, you'd see we'd be in a bear market. A lot of stocks are, but these are the ones I'm comfortable with buying, established brands, beat down, and overall they're doing well. What else did we have? We have Novo, but I gave you my thoughts on that. I'm waiting to re-enter. Milked it up to T4. That's where I told you I took profits. We almost hit T5, my final target, but we're back to T2. And I'm just not feeling the re-entry yet. I told you that last time. So what do we do? We're in again. This is another one. We're in at the bottom, right around it. Took the bulk of the initial leg up, kind of like very much like the Beyond Meat. I'm not in Beyond. I'm out. Told you, but even if I were to re-enter, that's just a bounce trade for me. Not enough evidence of a bottom. Same with Novo. Novo's pounding out a bottom, but like I told you, I think it may want to retest these lows we bought it out of. This is why we went long. This drop to the key support, the uptrend line, and price support on the weekly, with a likely selling climax, which is just like a blow off top in reverse. So you see that final thrust down on huge volume. That tells me this stock has probably bottomed, but it could be dead money for a while while it pounds out of base. That's why I'm not super excited. That's why, again, I'm a swing trader. I do invest. I do have longer term positions, but I like to just milk the bulk of that, shear most of the meat off the bone, and not try to get greedy, get in, get out. What else have we had this year? UPS hasn't gone yet, but I told you recently I added that as a long trade here. Again, based on, this is UPS. That is a blue chip stock. You guys, I don't have to tell anybody, who UPS is. This is long-term support, oversold, potential selling climax, my kind of stock. And so with these, so far we beat the shit out of the market, even since the midpoint. Remember, we milked it up off the April lows back to the 200 days long. Started shorting there, stopped out, said no more shorts above the 200s, so sat back on the markets for a while and started recently taking a few starter shots at the market. But these trades, this one hasn't taken off yet, have just blown the market away. Copper, it's not a stock, but it's kind of close to being it's a blue chip commodity, if you will. And we nailed it there with impunity. We went long right at the lows, right at support. We took profits right here, my second final target. So we milked that initial bounce. Now it's broken out. It may keep going. What else have we had? We had Churchill Downs. Maybe not considered a blue chip, but if you know of Churchill Downs, they've been around for 100 years. It's where they run the Kentucky Derby. And same thing. We bought it at long-term support. This is one I had the potential third and final target right there. We milked out almost 100% of that run. Side got out, and now look, it's back to support. But I'm not buying this one right now. My views on the market, and I think these gambling stocks are likely to roll over. PX, what is it? PX? No, BJ. Yeah, BJK, the gaming ETF. See, it just broke down. Put in a divergent high, broke down. Looks a lot like the stock market. And so these are your casino stocks, Las Vegas Sands, and you've got DraftKings in there and Wynn, all that stuff. So anyways, I just want to share that. And then what else? Oh, and then if you're a gun enthusiast or, blue-blooded American, I know there's a lot of controversy in this sector, but guns, and that's the same thing about Smith & Wesson's, which just broke out finally at the downtrend line today. We went long right here. So far, today's highs, that's a 25% gainer. Ruger followed up with that one afterwards. We gave that to you also in a video, and I forget, somewhere in here, it's up about 34%. So again, beat up blue chip stocks. I consider these guys blue chips. And that's where the money has been made and where my comfort level is going to remain on longs. Again, NVIDIA can go to the moon and back right now. I'm only going to look at it on the short side, not at the long side, because that is the crux of the AI bubble. And it's up today. So let's just roll into the stock market, and then I'll maybe wrap this up. Let me get to QQQ. So last week I told you, gave you, we had a sell signal here. Made objective short entry there. We had one kickback rally right there when we had it. Gave you an add-on there. And then we hit, where was it? This target here, I'm trying to remember. Calling for a bounce back to an objective short entry on this downtrend line and or resistance zone that ran from 595 to 596. And what I said, this would be not a stop out zone, but a no-go zone where you just want to hold off. So we popped back above that resistance level. And so if and when, which I suspect will fall back below here, I truly believe this market, I know what market we're in. It's not my opinion. This is fact. It is a full risk on market. There's a lot of, I'm seeing signs of institutional distribution, hand off from the smart money to the retail crowd. And I think that retail crowd is grossly underestimating what effects a government shutdown will have, and if we're going to have one. The market has become complacent in recent years because they didn't really mean much. We had them, and then they came together in DC, held hands, sang "Kumbaya," and figured it out. Well, it may be a little different this time. We've got, I don't have to tell you the dynamics up in DC, so we'll just leave it there and we'll see. So right now, the market's really not pricing much in, although the VIX, like I said, the VIX is still hanging in there. And like I said, the VIX itself, with the market flirting with or not far off all-time highs, the VIX is still making higher lows and has recently taken out. I'm not crazy about the downtrend line, I think I told you, but I'm more so focused on this most recent divergent low. Just like this divergent low right here gave us that, this divergent low gave us that, and this divergent low, I believe if things go right, could easily give us that again, if not more, but we'll see. And for that to happen, I'm just going to always say this over and over and over. The VIX is not going to do this or even half of that without QQQ breaking down and heading down to these deeper targets that I gave you right here. So first things first, the only thing I've done different since the last chart I gave you, I added this uptrend line right here. I already gave you the downtrend line. Like I said, we popped above there. I think this is noise. And once we fail this break, this gap, if this gap is faded, we go back down there. I think a move back down below 596 will be your first objective add-on or new short entry, with a second objective short entry or add-on on a break below that uptrend line that comes off the early September lows right there. And then you can see first target, second target, and really third if you want to. And again, each if and as we get there, I'll have to look at the S&P 500. I'll have to look at Amazon, Apple, Nvidia, and see where they're at to decide whether it's worth covering or holding for a break of those levels. All right, let's wrap it up here. 37-minute video. As always, you can hit that settings icon on the bottom right-hand corner and speed up any YouTube video to, like I said, it's up to you. I'll watch them up to 1.75, usually 1.5 times speed, and you can whip through these things a lot quicker. And you can always, if you want to go over a segment, stop it, pause the video, and change the speed back to normal. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.